in good shape if you base that on the retail sales numbers that we got as well, and that the labour market appears to have troughed, so we'll have to wait and see if they're right on that call.
Yeah, we will wait and see. Okay, let's bring in Stephen Hogan now, Senior Private Client Advisor, Equities and Derivatives at Novus Capital. Stephen, welcome. Good to see you.
Thanks for having me.
Now, putting this all together, pretty choppy session, but of course we are being influenced by economic numbers, not just out of Australia, but also out of China. Yeah,
that's right. And also we've got the Europe situation at the moment as well. I think investors are really being cautiously optimistic out there at the moment. You really only have to look at the US, the way it's trading recently. The last couple of sessions we're seeing big sell-offs, or you know, the Dow futures will be down heavily, and then when we go into the session there'll be a big sell-off and then the market will rally. Similar thing on the XJO here. I think probably the last sort of 6 months investors are being also cautiously optimistic. You only have to look at the Australian market, the XJO, the weekly chart.
Let's bring that chart up actually while you're talking us through it. Here we go.
We can see an ascending triangle forming on the XJO, which is generally a bullish signal. It signals accumulation. Even in a downtrending market, it can be a strong reversal signal. So with that chart, you just see equal highs and higher lows come in, and that just means that investors aren't ready to really run out there and jump into the market, but buyers are dominating. And we're seeing accumulation come in. So you can see the first move down there was a significant downtrend, and the ascending triangle taking place, which tells me that provided we don't get some sort of shock news out of Greece, that the market can go higher late into the second part of the year, when I do believe China will step up and rather than slowing their economy down, which they did deliberately, they'll actually provide a bit more stimulus to their market as well.
Yeah, an earlier guest said we might get a move in the RRR as early as this weekend, so I guess it really, that's a lot going to depend on the inflation numbers that are coming out, out of China as well. But, you know, talking about interest rates here in Australia, a lot of the stocks that you like are really based on a declining interest rate environment.
Yeah, that's right.
Does this change in this jobs number? It is just 1 month, of course. You know, we are sitting at 4.9%, as Matt and I were just talking about a number of reasons for that. Does that change anything for you?
I don't think so, from the point of view that it was more part-time jobs. We lost a lot of full-time jobs and there was a movement into part-time jobs. So I don't think the RBA will look at those numbers and think that, you know, they need to change policy there. What I think the RBA and what investors are disappointed in is that the contractionary budget that we saw from Wayne Swan announced the other day or yesterday. The RBA probably would have liked to have seen some stimulus to business in that respect, but I don't think from an interest rate point of view, I think we've probably got a couple more cuts going into the end of the year. I think that'll provide some help to businesses out there, and you know, businesses operating on debt facilities and so forth, they can breathe a bit easier.
So trading on the back of that, you like a couple of stocks, Telstra, Duet Group and Woolworths. Quickly run us through why you like those ones.
Well, look, Telstra for me is a bit of a no-brainer. You've got the NBN, that's in concrete now, it's happening. I think that's going to put a lot of cash on their book. You've also got the very high yield in Telstra as well. I think, you know, a lot of high net worth individuals will probably, with the interest rate cuts coming out, you know, depositories aren't going to look so attractive to them now. They'll be looking for a bit of growth, and with the high yield to accompany that, Telstra's one. Woolworths, not such a high yield, but we've got some capital growth there, potential in Woolworths. And yeah, the other stock that I like, Duet Group, just an infrastructure sort of group there, that high yielding as well, that I also believe has some capital growth as well.
Okay. All right, Stephen, we're out of time, but we'd love to have you back. We'll chat to you again. Matt, we'll see you later. Okie dokie, after the break we're going to bring you a first on CNBC interview with Singtel's CEO, and stick around, we're also going to head live to Mumbai for a look at